Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and with me is Snehi Shah. And well, what a week it has been as far as the markets are concerned. And of course, today was a Freaky Friday on D Street after the blowout we saw on Wall Street. We saw that ripple effect coming in on our markets as well. We were absolutely on one-way decline today. In fact, we ended the day with cuts of almost 1.5% on the Nifty, and Nifty Bank was, of course, outperforming Nifty, but nonetheless ended the day in the red with cuts of 94 odd points. So ended rather flat as compared to Nifty, but banks were in a better stead. But if you look at it on the weekly basis, we have snapped our 2-week gaining streak. In fact, if you look at the broader markets also, today we were underperforming as far as broader markets were concerned. There were deep cuts in mid caps and small cap, small cap, both trading with cuts of more than 2%. On a weekly basis, also Nifty small cap declined for the second straight week. In fact, if you look at the banking pack, as I mentioned, that banks were the clear outperformers. In this week, the PSU banks were faring better. In fact, the PSU pack also hit its 2-month high. We had HDFC Bank that came out with its quarterly update, and also positive note coming in, on HDFC Bank. That was auguring well with HDFC, and that was really pulling up the entire, banking basket there. But on the losing side, we had Nifty Metal that was really taking it on the chin. That saw cuts of more than 6.5%. Nifty Pharma, where there could be possible tariffs. Yesterday, Nifty Pharma was really rejoicing on the back of an exemption from tariffs. But come today, that party is over, and Nifty Pharma saw a decline of 4% in trade today. Nifty IT continues to reel under pressure, trading with cuts of more than 3.5%. Auto was also in the slow lane. As far as the market was concerned, that's how the market largely shaped up. Also, we also had crude that hit its 5-month low. In fact, we saw a massive cut of 6% coming in crude yesterday, and additional cut coming in today also. So crude is net down 7%, in this year. So crude prices have also moderated, but gold prices are surging away to record high levels because people are seeing gold now as a safe haven as global markets are shattering all over the world, Snehi.
Absolutely, that's how you could sum up today's trading session. Over the course of the week, even though it was a truncated week for us, it's still been quite a hectic one on the back of these Trump announcements coming in. Of course, like Ankita mentioned, Pharma was a sector that was spooked today, while we absorbed the shocks quite okay yesterday. Today seems to have had an intensified effect on the market because of how the global markets have panned out. So let's see what Monday's trading session holds for us. But just to cover up on everything that we've seen over the course of the week, auto sales were largely a mixed bag. Some of them did well, some of them have done quite okay in this week's trading session. Auto sales was one big talking point. You also had rupee that managed to gain some ground against the weak US dollar due to tariff uncertainty, but that was also pretty okay. Not much happening on that front as well. Vodafone Idea was a stock to talk about because government had they've hiked their stake in their shareholding in Vodafone, and they've infused liquidity as well. So Vodafone was another stock to talk about. And while we are talking about stocks, it's been a week of quarter four updates coming in. Anywhere from banks, you had a lot of banks that have reported their quarter four earnings, a mixed bag on that front. Today you had HDFC that was gaining. On the flip side, you had DMart, which is Avenue, as well as Angel One, that was slumping in today's trading session. Adani Wilmar did pretty okay for itself. You also have the news over the course of the week that RBI is planning an 80,000 crore open market operation coming in. That's in April. So let's see how this affects the trade exchange as well as the rupee. And also a lot of FMCG quarterly updates coming in. Dabur was bucking the FMCG trend, reported very weak quarter four updates. On the flip side, Marico is a company that has done pretty well. Adani Wilmar, like I mentioned, also did pretty okay for itself. But well, yes, the tune of the week has been Trump, and the entire globe dancing to that tune the way Mr. Trump wants it to go. But well, negotiations are on the table, so nothing is certain for now. And while that might seem positive for now, we've had new news coming in for Pharma as well, so that's also another sector to watch out for. But on that note, let's welcome the guests on board today. Let's talk to Mr. Ajay Bagga, market expert, as well as Rajesh Palviya, who's joining us. He's the head technical and derivative research at Axis Securities. Good afternoon to both of you gentlemen. And Mr. Bagga, I want to come to you first because it's, of course, crucial to understand what Nifty levels are going to be next week. But I just want to get in your quick take on what you are making of this entire tariff tirade by Trump. And also, we always knew Pharma was never going to be completely exempt. And there's been a very ambiguous statement on Pharma. He said that these tariffs on Pharma are going to be something we've never seen before. How bad could it really be?
No, that is Trump speak. So we should not put too much attention to it. But it was very clear right from the beginning, and I kept saying yesterday in the shows I did that in his speech he mentioned that under Section 232 there will be an investigation in pharma, in copper, in semiconductors and lumber, and as and when they complete that investigation, they will levy special sectoral tariffs like they did on autos. So that market ran, ahead of itself on uh, pricing pharma shares up yesterday as if he has given them a go by. That exclusion was never there. What we have to see is that it's a very dramatic shift in global risk sentiment. And these kind of things don't get resolved very soon. It takes the market some time to digest it and then move ahead on whether to buy more or sell down further. Right now, it's risk off, and on the margin, there is selling of US stocks, there is buying of US treasuries, seeing the yields are going down. Everybody's trying to reduce their dollar exposure. The dollar is not king dollar all of a sudden, and we are seeing Swiss franc, yen gaining as much as 2%. Yesterday, the dollar index, for the first time since the DXY index was incepted in 2005, it was the largest fall in the dollar index. So these are very dramatic shifts happening in the markets. We should not underestimate it. We can't say also, like in 2008, we made that same mistake in 2013 also, where we said India is decoupled. We are a macro story. We are a domestic consumption story. It won't touch us. Of course, it will touch us when the risk off happens. People start looking at pockets of liquidity, and our exits are very large. We provide good exits to anybody wanting to take out money. So we will be connected to the global risk off through portfolio outflows. That's what happened today. Nothing changed for India to warrant the falls that we saw. It's more the dramatic downshift in the global risk appetite.
Right, Mr. Bagga, I just want to build on what you just said. You said that the drawdown that we saw today was mainly a result of what is happening globally. But is that safe to say then that as far as India is concerned, the story remains intact? I mean, the couple of things that are playing out right now, the dollar index has cooled off. In the future also it is likely to remain subdued. The oil prices have come off sharply, so that also augurs well for India. And come earnings season, we will see a better earnings season as far as India is concerned. So does it mean that from now on good days are ahead of us? If you just remove the, I mean you can't really remove the uncertainty from the tariffs because we cannot really continue to decouple, but as far as Indian markets are concerned, the story remains intact.
Latter part of your question first. Look at it as a five-part theater or drama. We are at Act 3, where Trump has finally, after threatening, and doing opening overtures, he has finally now unleashed a huge barrage of tariffs. Act 3 has happened. Act 4 will come with retaliations or negotiations, and Act 5 will be rollback. How far is rollback? Is it 3 months? Is it 6 months? We have to wait and watch. Right now, the way the tariffs are in Act 3, they are not palatable to the global risk sentiment. So that's one. Second, on India, we are a structural story. So we are in a good structure as far as economic growth goes, as far as our markets go, our resilience of our markets go. But when these cyclical winds come in from the global risk off, then we are also caught in it because we are a market which is very much integrated into the globe. The economy is not so much integrated. The economy, you can say about 1.2 trillion out of the 4.2 trillion is dependent on exports and imports. So it's okay, but it's not like the East Asian and some of the, say, a Mexican economy or Canadian economy, which can't survive without the export imports that they do. We can. But that on the margin, that risk of sentiment is causing a cyclical risk of coming into India as well. Structurally, we stay a very multi-decade story. That there is no dent in that story, but we have to withstand pockets of these cyclical corrections.
Okay, so that's the take coming in on how we're expected to pan out in terms of the tariffs and how our markets are expected to react. But Rajesh, welcome on board as well. And just want to get your sense on where do you think we'll open on a Monday, given the kind of cut that we've seen today. Do you think we have completely digested this tariff news and Monday could be better looking for us? Because yesterday we absorbed this shock quite well and today we were spooked. So do you think that's only because of how the global markets have performed and Monday could be better for us? Or do you believe that this is the start of another correction rally that we can expect to see going ahead?
So, Isni, again, there would be impact of global cues definitely on the Monday opening. Looking at the setup, the weekly close is now below 20-day, 50-day moving average for Nifty. But on the other hand, Bank Nifty is showing a different kind of scenario because Bank Nifty is quite stable and holding above all its near-term, short-term, as well as long-term moving averages. So here we have strength, but on the other hand, Nifty has given up all the gains as well as broken the all important support area. So for Monday, 22,760 is the critical level for the Nifty. So if it breaks those level, then we may see continuation of this down move and then further follow up selling towards 22,500 we may see in the coming week. But 22,760 if we able to hold out, so I think some pullback action we may see in the coming days. And then again in the pullback 23,100 and 23,200 may act as a major supply zone as of now because that's the major supply zone on the near term structure. Looking at the broader market also, the very few pockets are showing strength in terms of technical. Banking is one space, NBFC, FMCG, and some strength. If we look at some cement stocks are also showing strength. So leadership is still absent. Only banking sector could give some support to the market to move further higher. So I think it's going to be a range bound kind of scenario for coming week. On the downside 22,760 lower band, and on the higher side 23,200. This could be the possible range for Nifty. But again, if we see major cut again in the today's session for global market, so I think that impact would be definitely there on the Monday opening.
You mentioned how Nifty Bank is likely to pull up the market. In fact, if even in today's trading session, look at Nifty Bank. I mean, it was pretty resilient. In fact, we ended very flat. We were in the red, but it was holding out pretty well as compared to the rest of the market. So now, of course, after a period of consolidation is what we are penciling in. After that, do you think the banks can really lead the next leg of rally? And also, what are the levels to watch out for on Nifty Bank as well?
So definitely, yeah, Bank Nifty is looking very interesting, and I believe that once has also shown a good traction during the week itself. So I think Bank Nifty may give some support to the market, and on the downside, one should keep their stop loss around 51,000 level. Till these levels are intact, there is a possibility that 52,200 could be the next target for Bank Nifty in the coming week.
Okay, so those are the levels to then watch out for. And Mr. Bagga, I want to come back to you and just get a quick sectoral view on the entire metal space that we've seen. There's lots of factors that are ailing the entire metal space. It's not only tariffs, but it's also demand at a higher level. And it's also the case that base metals have run up quite a bit. You have gold that's actually, broken its gaining streak. You have copper prices have gone up quite significantly and now are coming down. What's your entire outlook on the metal space? Do you believe that this dip can be bought into, or do you think that a further rundown is inevitable for the sector and time now to avoid metals for some time?
Avoid. China has announced 34% tariffs on US goods from April 10th. It's getting messy, and metals is equal to China. As it's a very easy equation to understand. They make 1 billion tons of steel, for example. As US has put in duties, China was playing another game. China was hoarding as much copper as it could. It was bidding up the metal prices. I don't know what the game was, in terms of its ultimate objective, but China was the buyer holding up metals. Otherwise, metals should have been crashing 2 months earlier. When Trump first started the tariffs in February, we should have started seeing metals crashing. Now China has left its hand, and you're seeing demand go down. The As demand goes down, metals are priced on a global basis. They're not priced on a domestic basis. No matter, our metal companies are very efficient, and we are a domestic industrial story, capex story. When metal gets spoilt in terms of price globally, Indian metal players also have no place to hide. So avoid metals. China has started Act 4, retaliation is starting. So we don't know how this will end up. Best to stand on the sidelines and let this play out.
Avoid coming in on metal. But Rajesh, let me come to you. What are you long on? What are you shorting? Are you shorting Nifty IT? I mean, further pain left in IT. What do you see? We did see Nasdaq go through painful session yesterday, and Nifty IT has been reeling under a lot of selling pressure. Because of the slowdown in the US and the dollar tailwind ebbing away now. So, would you be short on Nifty IT, and what are your long calls?
So definitely IT is avoid, and again one can remain on the short side of trade for Nifty IT as well as the large cap IT stocks, because if we analyze the overall structure and Nifty IT is far below to 200-day moving average, and most of the large cap IT stocks have broken their monthly support area. So I think we may see further more weakness in Nifty IT, as well as again agree with the view of Mr. Bagga on the metal sector. Also here also there is a weakness. So I think these two sectors are clearly in the bearish zone, and I think we may see further more down move in these two sectors. So I think stocks from these sectors should be avoided. One can look for going long in banking as well as NBFC space. These two space are looking attractive, especially in banking. Large cap banks are looking attractive. So from private sector bank, I think ICICI Bank, HDFC Bank, Kotak Bank are looking attractive. And FMCG is another pocket, but again in the select FMCG stocks are doing good. So I think some of the FMCG stocks can be looked at for near-term trading perspective. And cement is another space where one can find opportunity, because here also we have seen strength throughout the week. So I think cement could be the sector where we may see upward momentum in the coming week. So these three pockets are looking attractive for trading point of view on the long side.
Stock specific picks, two calls right now that you're liking.
So first one is Indigo. Stock is almost trading near to its all-time high trajectory. The way stock is holding in this volatile market, I think we may see target towards 50 to 80. So one can buy Interglobe Aviation with stop loss of 5,000. And on the short side, again, IT is looking weak. So HCL Tech can be looked at to short in the coming week. Downside target we are projecting towards 1380 with stop loss of 1455.
Okay, so thanks for that view coming in. Long on Indigo, short on HCL Tech is the call coming in. Mr. Bagga, very quickly want to come back to you. Like you just said, and we've just received word, China has imposed additional 34% tariff on the US. Do you believe this is the beginning of another world war, so to say? Because, US has been very, very clear, and they have warned countries to not hike their tariffs, and China has done just that. What's the outlook and what's going to happen ahead?
Yeah, what's going to happen? Very tough to say. It's not world war. It's posturing on both sides. Nobody can, bear 54% tariffs and 34% tariffs. The trade only stalls, and it has happened. History is very clear there. 1830s, 1930s. It brought down global trade, led to the Great Depression. So that playbook was there, but US government has become a billionaires club where they thought they can change the laws of economics, and now the real world is striking back. I think EU will also announce some retaliation over the next few days. So now Act 4 has started. Act 5 will come with some negotiation and some rollbacks, and all sides declaring victory. Markets are waiting for that. So Now we are reaching the panic button on the markets that China has also reacted. So we have the two global powers putting huge tariffs on each other. That's not a good place to be in, markets wise, risk wise. So you will see more selling in the US markets, but we are getting nearer to the solution. So it's good. It's happened April 10th. Chinese tariffs also come in. Hopefully, now committees will be formed for both sides to start talking, and that will lead the rest of the world ahead into the Act 5. Act 4 has just started.
All right, here's hoping that the Act 5 starts very soon, and of course there is a pullback from all sides after all guns that are blazing right now. The guns are pulled back, but here's hoping for that. Mr. Bagga and Rajesh, thank you so much for taking the time out and joining us today. And well, with that, it's curtains down on this edition of Your Trade. Snehi and I will take your leave. Thank you so much for tuning in, and happy weekend.